Hello everybody. In this video, I would like to help you determine what we need to subtract from the maintenance and capex so that we're not including things that don't directly contribute to the investment of capital that would ultimately affect the cash returns that you would receive as the owner of a company that you are evaluating. So in our example, we were looking at Apple. And we came up with a number of $2.7 billion. So I would like to show you how I came up with that by looking at Apple's 10K. So let's bring that up here. Okay, so we've got Apple's 10K. This is for the year of 2018. They just filed only a couple months ago, which was nice to have some new numbers. So what we want to do is we want to, first thing we want to look for in order to determine the maintenance and capex is we're going to look for investing activities. So you'll open up a find window here in your PDF reader or your website, usually by hitting Control F on a Windows PC. And then we'll click Next, and that should take us down the form. And here we go. These are the numbers that Apple is giving us, and they're saying cash generated by and used in investing activities for the year of 2018 was about $16 billion, $16.06 billion. So that's a pretty good amount. Now, how much of that is not directly correlated with returns? So the next thing we want to look for is a section that kind of goes into details about that. So cash generated by investing activities of 16.1, so that was that number we were just looking at, used in 2018 consisted primarily of proceeds from maturities and sales of marketable securities, net of purchases of 32.4 billion, which were partially offset by the cash used to acquire property, plant, and equipment of 13.3 billion. Okay, so the cash that they generated from investing activities was 16.1, and then we offset that by the acquisition of property, plant, and equipment of 13.3. So those are the numbers we're looking for. We want to see how much money was generated, and then we want to subtract anything that doesn't correlate directly with investments that would feed money directly into our pockets as the owners. So 16.1 minus 13.3 gives us $2.8 billion. Let's look at a company like Square, where they're more of a software platform that helps to serve customers. What they do is they allow businesses to charge customers using credit cards, and they also have back-end software. They also help you with your accounting, and they now have a finance arm as well. So Square is a growing company. I do not believe they're profitable yet, at least not in this 10K when I was looking through, but I'm sure that it's a pretty strong company and that they're going to move forward. So we want to look to see. They probably have a lot of money generating from investing activities, and we want to see where they put their items that we could actually remove. So take a look for investing activities. So let's scroll down. So here we go. The net cash used in investing activities looks like $340.6 million. So $340,611,000. So let's take a look and see what they actually what that breaks down to. Search again. So here's the cash flows from investing activities. So in the year ending in December 31st of 2017, cash used in investing activities was 340.6. So that's the number we were looking for. And it looks like they used that for lots of marketable securities, probably raising money, proceeds of sales and marketable securities. So there's the raising money. We increased our investment portfolio proceeds from the financing activities described below. So the purchase of property and equipment of $26.1 million, which is used to just help us scale. So not directly correlated with returns. So this $26.1 million is what we will go ahead and subtract from the overall 340. So Let's take a look at what that will generate. So say $340.6 million minus the 26.1. So that leaves us with $314.5 million that we can use for our calculation going forward. Okay, so I hope that helped you get an idea around trying to find this number. It can be kind of difficult because there is no standard way for companies to tell you about this. Some will say cash flows from investing activities, others kind of hide it within other sections. So it can take a little bit of digging, but it will be worth it at the end. It'll help you determine a better, stronger number for your 10 cap analysis, used to help you find wonderful companies. So there you have it. And if you have any other questions, please feel free to leave comments below the post. Thanks. Have a great day.